Out of it, they've created a product and a service that can help you bridge the gap from its current state and getting it up to its future state. So everybody put your hands together right now for Elvis. Yeah. How y'all doing this evening?
Doing great.
Doing great. You might want to move up a little bit closer. So Elvis and Anitra, we want to start off with what got you into real estate investing originally.
Really, my why. You good?
All right.
All right. And my family, really.
Okay.
I was just searching for the opportunity to succeed in something and take care of my family. And real estate was the vehicle for me to do that. And that's how I got started.
Okay. Anitra?
For me, it was intentional. I was in college. I was at Xavier University, and I got put on academic probation. And my dad told me to set out the next semester. So I set out the next semester to rethink 3 years of being in computer science and realizing that wasn't my forte, right? So I worked at Home Depot full time, and then I quickly realized this ain't it. this is not gonna be it. So I re-enrolled back into Xavier the following summer, and at that time, Home Depot offered 50% of my tuition. So that also motivated me to change. I changed majors. I went to I majored in business, and then what I would do is I always knew that I wanted to buy a property when I graduated, right? So what I would do is I would register the maximum amount of classes that I possibly could, and then I would drop the classes by the drop date to get the refund check. Coupled with 50% of the tuition and the refund check, I saved my first down payment in about 2.5 years. And when I graduated, I placed myself in a position to buy my first triplex in Central City. I'm from the Westbank, so when I was driving up Central City, I didn't know I was in like a war zone. But it turned out to be really good because that property, not knowing anything, I didn't know anything about construction. I bought, the house was leaning, the subfloor was gone, the piers were gone. It had plaster walls in it. It had top knob and tube wiring. I learned all of this on the first deal, right? I was $80,000 all in, even with all of my mistakes. People stealing from me, contractors stealing from me, an addict stealing from me. I was still all in at $80,000, and the house had appraised at that time, pre-Katrina, at about 180 or whatnot. So I entered rent. My mortgage and all of that was $800, but you were only renting out a 3-bedroom, 1-bath, 2-bath at that time at $800 aside. Then Katrina hits, that house did not flood, and I was in position to get $1,500 aside. And at this time, now I'm promoted at Home Depot as a Home Depot manager, so that's how I got started.
Right. So how'd you guys kind of figure out what was your entry point into the business? So you mentioned family was important.
Yeah.
So out of all of the different niches, what was yours that you chose, and what was your train of thought of how you selected it?
First, I had read the book Rich Dad Poor Dad by Ron Kiyosaki. In one of the passages, he had said that attend 2 seminars a year. And I went to Miami for a seminar, and pretty much they say get started with wholesaling if you want to get started in real estate with no money, no credit.
Mm-hmm.
Yeah.
Right. Nietzsche. How you chose?
At that time, I only knew of being a landlord, so I didn't know anything else. So I thought that's what you had to do. And I had a loan officer at Drive's Bank that kind of started guiding me into fixing flips. So that's how I did it. But originally, I just thought you could only be a landlord.
Yeah, I'm glad you said that. A lot of people think that word only. If I want to get into real estate, only can do it this way. I only have to be an agent. I only have to be a flipper and investor. So tell me what you learned about that niche in Miami from that experience, and what you learned as far as does this really work for me as a buy and hold investor?
Well, well, just starting out, for me, I had gotten like this analysis paralysis state, and I didn't get started right away. But I did purchase Showmentary course, the Flip to Freedom course, and I learned a lot of information from it. And what wholesaling taught me was that like sales and marketing is very, very important in wholesaling. I got to meet people like you, and like all of these people, most of these people in the room I've done business with. We just sat down with Mr. Birdsong this week. We doing deals with Stedman, doing deals with Will, Emile. Like, so all of these, like wholesaling brought all of these connections together.
Mm-hmm.
Yeah.
Right. And what you learned about?
I learned that I didn't want to be a landlord. Honestly, I realized now actually when meeting Miss Mickey, I used to shy away from property manager. I learned that when you get up to a certain number of units, for me, it's essential to go ahead and hire that out, right? You know, staff your weaknesses, and get a property manager.
Yeah. So what you think is a misunderstanding people have in the niche that you told? The same thing, Anitra. What you think when we get to you, what's a misunderstanding of people think about being a landlord? So for you, what's a misunderstanding of people that want to get into wholesaling? So what do they misunderstand before they actually get into it?
I think the misunderstanding is that you need money, that you need credit. They got something that's called the energy budget. You know, you go out there.
What's that?
Your energy budget, you write down, I buy houses on the sign, and you go out there every single week and put them out. You know, you don't have to have a lot of money to do that. You know, so that's the biggest misconception.
Tell us that story about you and Russell putting out signs, and how you made that a family business.
Well, yeah, me and my brother used to drive trucks.
Mm-hmm.
So we originally was partners in the beginning, and our deal was that he pay the bills and I go out there and create this business.
Mm-hmm.
You know, and for me, I just went out every single week and put out signs every week. I didn't miss a week for 2 years, and I think the biggest thing is to be consistent in whatever you do, and you're gonna get deals for sure.
Yeah. Niche?
I think the misunderstanding is you don't realize that you need reserves, right? For every property that you have, you definitely need to have reserves set aside. The other misconception is you think that, hey, I just renovated this property and nothing's going to break, right? Well, if you got people in your house, trust me, something is going to break. Somebody's going to call you about anything, you know. And I think that's the misconception. You need a when you buy a property or you get into landlording and stuff like that, you definitely need to be prepared for the what ifs.
Yeah. So fast forward to where we at now with all those lessons learned. So today, Eldridge, right? You get to meet Eldridge back in Miami. What advice you giving Eldridge back in Miami before you get started?
I would study personal development early, and also buy property sooner.
What you mean?
Because I got stuck in this like Ferris wheel with just wholesaling. You know, I feel like I should have bought at least 1 or 2 of those deals.
What you think kept you from doing that? Because I think that's an easy trap for all of us.
I really don't know what kept me from doing it. Probably just being satisfied with the assignment fees, you know, and not thinking bigger.
Right.
Yeah, and just, I was thinking big because I was thinking about building this super big wholesaling business,
Right.
you know, and I don't know, I don't think it was a bad thing because I read the book, like the one thing, you know, and that book really had me dialed in just on wholesaling. So, but I just didn't know when to take that next step. I probably didn't know the right time to take that next step.
Right.
Yeah.
Right. And the reason why I asked, I'm going to get to you too, Anitra. Everybody in the room is already in sales,
Yeah.
right? Everybody in real estate already. For initially for the capital gains, the freedom and the cash, and buying those rentals is like Anitra said, could be painful because you feel like if I take out this chunk of money and make this investment, we used to feel like a fire hydrant worth of liquidity is now a dripping faucet, and I'm dealing with all these problems at the same time, right? So I'm glad you mentioned that. So Anitra, what is Home Depot? Anitra. So what does Anitra today tell Home Depot? Anitra with the orange polo and the brown,
I'm gonna have to go back to something I said earlier.
Okay.
Staffing your weaknesses, right? I tried to do everything on my own. I didn't have a property manager. I didn't really have an attorney to confide in to get the great advice. So I would say that, right? When you're working a full-time job, and then I had no days off. I worked 7 days a week. I would work full-time at Home Depot and then had to tend to my properties whenever I was off, on my 2 off days. Or I was running, and then my life was because I used to work in La Place. I was the opening manager when they first built that store. I live on the Westbank. The trip is 40 miles one way. So I spent 80 miles on the interstate every day going back and forth, and then I would have to remember, oh, I gotta stop off by this property, or I found myself shopping while I was at work, or on my lunch break, because I have to bring these materials to this particular house and run behind this contractor and stuff like that. So I would say as early and as soon as you can, staff your weaknesses. Network with top professionals in that particular area.
Yeah. What's how would your advice on taking the steps to learn how to delegate? We're getting in the business with real estate. At first, it's just you, and then maybe you might gradually add on family, right? So, what have you learned through your journey of how to delegate, how to decide what to delegate, and maintaining, as it goes on, the people that you delegate to?
For me, what I learned, pretty much it boils down to 2 things. Either become an expert in each of, like, for example, a wholesaler. You have an acquisitions position. Like, I probably made 1,000 calls or 2,000 calls before I delegated that position, because I have to be able to teach my acquisition manager on how to perform that position. And the next thing is, if you don't like something, delegate. Like, I knew I didn't like cold calling, so I never cold called before. So that's my 2 cents on delegate.
Right. So what about once it's delegated? Because you still have an end result in mind.
Yeah.
So once you delegate it to somebody, whether it is a family member, a virtual assistant, or a hired, how you maintain the quality control?
Okay. Yeah, I'm really big with scorecards, and also recording like quality control. Like, at our biggest stage, we had 2 co-callers, and it was probably making, I forgot how many calls they were making, but weekly I would get on the recording just to hear their conversations, and every single week we would discuss those conversations, and like make corrections here and there and things like that. Like, my acquisition manager, we had a scorecard section for that person. Like, how many leads you actually talked to, how many offers you made, how many appointments you set. So those scorecards and the recordings don't hold them accountable to complete the task.
Yeah, got it. Anitra, what you learn about what to and how to delegate and maintain quality control once you delegate out?
At that time, I didn't have a business mindset, so there wasn't anything for me to delegate. I just was. I had the credit. I had the money. I just decided to buy a property. I never thought of it, to automate it. I never thought to do the franchise prototype or anything like that. I was mom and pop, so I didn't believe it.
All right, that's perfect. So I think that's a good segue from wholesaling to investment landlord. How in the world are you getting to the world of private investment?
Just paying attention to people like Denny Stumpf,
Yeah.
people like Ryan Markham, uh, going to different networking events, and Anitra and I just felt like there's a different way of doing it. We pretty much, with our vertical capital company, we took the wholesaling business and pretty much did it in reverse.
What you mean?
Instead of going out there and marketing for leads, sitting here and all the leads before they come to us. So we did it in reverse. So we felt like this is not a better way, because each way is good, but it's just a better way for us.
Yeah. And for the people that don't know, so Dennis and Ryan are people in our network from New Orleans Real Estate Investors Association that are all private lenders. So what was it that you learned from watching them that attracted you to this niche?
But the defining moment for us was when Anitra and I went to Anthony Chara 4-day intensive.
Who is that? Anthony Chara?
Anthony Chara.
Who is it?
He's a real estate coach, real estate investor. We speak at the January sometimes. He multifamily, yeah, multifamily. And I guess Anthony Chara was in the class and he was asking everybody like how many units they own. And I'm not gonna name the guys, but these guys had said they own 300 and some units, and then the stuff said I own 300 and some units too. So that was like the defining moment that we needed to be in the limit.
So for the people that didn't catch it, what's important about that dynamic? So you got two different parties that said the same exact thing.
Yeah.
But what's the difference in the energy involved?
Well, one was the operator that went out and found those deals, and they managing the tenants. And the other was the lender, and he's passive. Like he could be wherever he want in this world and still collect that passive income.
Niche, what did it for you to be a private money lender?
Yeah, that was at the course that he and I were in the same class together. He didn't want to come, so I struggled. But it was when Anthony went through all the stuff that we had to do to acquire an apartment. And I think it was probably on day 2, I pulled him aside, and I was like, bro, this ain't it.
Mm-hmm.
This ain't it. So
what part is like you wasn't happy?
everything, to go looking for the properties, to pull the people together, to manage that process of pulling people together, managing getting a property manager involved to collect the rents and do all that stuff. I was like, there's too many moving parts, right? And I felt like for all the stuff that you were doing, I felt like the percentage split wasn't equitable for us, right? And I was like, this is too much. It's called syndication, right? To syndicate, to do syndication on an apartment. I was like, nah. So on one of his slides, he just kept referencing, like I told you earlier, just kept referencing George Antone. And that forced me to dive a little bit more into George Antone. I met one of the guys that was in my group in that particular class recommended a few books by George. I went out that same day, got the books, started reading through the books. One of them is the Banker's Code. He posted it on the site. And when he starts diving into different ways on how you can use your capital to be a passive investor, I shared that information with Eldridge, and I think that's the point that we begin to pivot.
And which type of capital? Because I think another misunderstanding when people say, I met a lender, I met somebody that's a whole money lender, private money lender, they think about these millions of dollars in an offshore account or money buried under a pyramid somewhere. So when you say what type of money did you guys learn that this is easier than I thought?
It doesn't take a lot of money to start lending, right? You have, if you have money set aside and it's not doing anything, right? And you have enough reserves to maintain your expenses and, to maintain your quality of life. and you have this money that's sitting in the bank. Well, I call that dead presidents. It's not working, right? You can lend a wholesale $10,000, 15,000, 20,000. You know, it doesn't take that much, right? You can give them that and assign it an interest. And now all of a sudden that 10,000 or that 15,000 that was sitting in the bank at 1%, annualized, you can make that spread in a quicker way, 4 to 6 months. And then you just keep doing it over and over, and that 10,000 grows. And now you probably have one borrower, and you just keep lending that person the money.
Yeah. What's one more additional example beyond my own checking and savings account that you guys learned that I could also lend on? That's what.
You got it.
Question.
Lines of credit.
Okay.
That's very, very important. Of course, you know, I would say you have to know how to manage it. But if you have a house, your personal house, or a personal line of credit or a HELOC, you might want to access that, because especially if it's your house, you're sitting on a ton of equity and it's not doing anything. You pay down your mortgage and you increase your equity, and it's just sitting there, and it's actually just benefiting the bank. It's not benefiting you in a way. You know, I'm ambitious, so, you know, and again, the management piece of it, you know how to manage that. You know, you might want to tap into a personal line of credit if you don't have a house, but explore the option of a HELOC. If you, let's just say you qualify for 50,000 on a line of credit, doesn't matter what it is. You know, a lot of times we complain that we don't have enough money, but a lot of times we're probably sitting on that money. If you use 50,000 10 times, you just gave yourself access to what? You
50,000 to 500,000.
You just gave yourself access to $500,000, which most of us, the misconception is we got to Dave Ramsey it and save it, right? And that's not the case.
Yeah.
You didn't mention one though.
Which was?
Life insurance. You can use your index universal life insurance to make a loan.
What's that? That's new for
Can you
me.
explain it?
Well, you can use your stock portfolio.
You use the stock portfolio to make a loan.
Well, don't speak fast. Insurance.
All right.
What is
No, he don't.
insurance? Okay, yeah, insurance.
All right. So I have an index universal life insurance. It followed like the S&P 500. So I put money in it every month, and after a year, you could lend out of it. You could borrow from it. And what I'm doing is borrowing from it, and I'm going to lend out.
And the value doesn't decrease when you borrow. When you borrow from it.
Yeah.
What's the example when it does decrease? So that's beneficial versus what other way that people normally do? When you say the value doesn't decrease,
Because it's a stock.
what's the other
That's
vehicle
more
that
of a-
normally does?
That's more of a professional question to someone.
Okay.
Yeah.
Yeah, I wouldn't be able to go into all of that. I just know that because it's on the S&P 500, it generally does not decrease. But I would defer that to an insurance professional.
Okay, perfect. What's some of the risks that y'all considered before getting into this net? So the light bulb went off in the Anthony Sherrod class. Perfect.
Yeah.
So now, pretty sure the next step, what money do we have? We have access to it. Now, before we lend this out, what's your train of thought on how to mitigate the risk when you lend this money out? So my question is, what risk did you think about before starting lending money
The risk before.
that you needed to consider? What risk you got to consider?
I think education limit risk.
Okay.
You know, so I really don't feel like it's a risk.
Mhm.
But most people will say it's a risk, but I really don't feel like it.
So, go ahead.
We had the experience though already when we when I did a deal with Ryan Markham. So the way how we structure our loans, I actually done that deal. I was the borrower, right? And then again, I introduced Ryan to Eldridge, and he done a few deals with Ryan. So again, if you have once you start getting experience, that is your education. And so we started diving into his paperwork, right? Diving into it, why this, why that. And by this time, we had already built a relationship with him to be able to call him and ask him a few questions. So start asking him a few questions, and then after that, again, we had money just sitting in the account. And based off the education from George, you know, this money sitting in the account, it wasn't doing anything. COVID hits, and so I'm like, this ain't right. We can't have this money sitting in that account and waiting and waiting and waiting. And here we are 2 years now in a pandemic.
Right.
So, I mean, when was that opportunity gonna happen?
Right.
We didn't pull the trigger. Then.
Got it. So that's a good answer to the question too. So now, how does that impact your underwriting process? So I can tell you from experience, one of the most painful things as an investor is going through the scrutiny of
That part. Well, we do the underwriting together, but
The underwriting is pretty straightforward, right? We look at what the current market value is. We're not looking at the ARV. We're looking at what can this property potentially sell for if you don't put any money into it, right? And then I'm a realtor as well, so I go online, I look at the property, I pull up all the conditions like the property that you have. And at this particular point, I'm looking at days on market. And it's a no-brainer. If I'm looking at the days on market, I might do a 1 mile radius, and then I'm gonna narrow it down as much as I can to that particular block. You know, I know it's probably tedious, but that's what I do, because sometimes in a 1 mile radius, you might have that just phenomenon where that's driving up the cost in this particular in this particular market or this particular neighborhood. And what I mean by that, you might have where everything else is selling for like 40,000, and then this particular property is sold for 80,000. Well, why? Why did it sell for 80,000? But then when I look at it, well, they overpriced it. They decided to sit on the market for 365 days, so now I'm eliminating that one, right? And I have to go back to the ones that sold for 40. But the why is because we want to help people who are trying to get started in real estate. It's really that simple. To help people that don't have the credit. We realize there's a whole segment of investors that are being excluded from the traditional lending process.
Yeah, I agree.
And it's not that you don't have a good deal, you have a really great deal, but you know, First Bank and Trust don't care. They want to know that you have that amount of money plus some more money to be able to pay them back in the event that you default. And I understand that. And then plus they want you to put more money down. And it's like, for you to get a property 70% below market value, they don't understand that process.
Yeah. So what have you learned from the banking industry that made you more empathetic? Like, I get why they're doing it now. We're not going to do it, but I can understand why. So what part of that process?
To limit their risk, really. They want to make sure that to check your bank statements on the week before closing, just to make sure you still have that money and you didn't go spend it or something. Or they monitor your credit because they don't want you to go buy a car before you remake this loan, because that's another ding on your credit. I think it's all to limit risk.
Okay.
But since we are investors first, and then we are lenders, so we understand the investor.
And I think they changed their practices after the crash, right? I started in 2004. I used to just be able to call and be like, look, I need this money. And they'd be like, okay, you know, just bring this stuff in. Having a relationship too with the bank is very important, right? Because I had everything with this particular bank in 2004. So for them to just take a look into my bank account, I didn't have to resend them all of my taxes and, you know, all that kind of stuff, you know, when I wanted to buy a property, as long as within those 12 months. But I think, you know, the banks got more stringent, as they should have, because back then, they had a bunch of knuckleheads running around, including in New Orleans. They had a lot of people coming out of state investors coming in, buying up blocks, doing stuff that they call equity stripping, which was just fixing a property up just enough to pull the equity out. They would get tons of cash, and then just leave those properties in default on the loan on purpose. And I think that went around a lot, you know, especially in our area in New Orleans. So for them to change that, I understand.
Yeah. So now for vertical capital, what does an ideal borrower look like for you guys?
Someone who have the property low. That's pretty much it.
How low? And below what?
Yeah, if you have it 70% or lower,
Then what type of value?
what you mean by?
Cash value, market value.
Yeah, current market value.
Okay.
If it's 70% below current market value, we'll make the loan.
What other qualifications a borrower might need to work with vertical?
That's pretty much it. That's the deal. We look at the deal. You know, we're not looking at credit score or anything like that. Sometimes we require you to put a down payment down. But if you get it low enough, we'll come 100%. So that's it.
We
wanna
have
add
just,
anything else?
yeah, we have a pre-closing condition, and if it's a property, of course, we are going to require insurance on the property.
Okay.
It's pretty, you know, again, to protect our interests and stuff like that. But other than that, it's a no-brainer.
What type of insurance?
We'd have to get hazard and flood.
Okay. All right. And one more question, then we're gonna take questions from the audience in a little bit. So I have a property under contract. I'm using an example right now. So somebody in the room right now that has a property under contract, what's the first steps to getting in touch with Vertical Capital and getting the process started? What does that look like?
You can visit our website. Just give us a call directly.
Okay.
But the best way is to fill out the application on our website, and we'll get back to you in 24 hours.
What's next after the app? So I got property that's worth $100,000 under contract for 10, and I send it over to you. What's the next step?
So Anitra and I are gonna underwrite it and look at some comps. Decide if we're gonna approve it. Decide if we gonna go 100% or a little under, and then we're gonna send you an email, approve or deny.
Yeah. And how many weeks is the underwriting process?
It's 24 hours.
24 hours.
24 hours, guaranteed.
Guaranteed.
Yeah.
We have one request that if you're thinking about using us, our preferred closer is David Birdstone. So if you have it under contract, I highly suggest that we push that contract over to David.
Yeah, David, raise your hand. That's David Birdstone, preferred title attorney. So we're gonna take some questions right now. Anything that y'all want to add as far as the example of the process? So once I send that contract over to you, 24 hours pass, David have it. We got clear title. That's it.
That's it.
Yeah.
Yeah.
Pretty much it.
Yeah. All right.
I can add something.
Go ahead.
Right now we doing a lender list loan.
that?
It's a 4 to 6 month loan. Our construction loan should be coming out within the 3 to 6 month range. So right now it's just lender list.
And how do you describe the lender list program?
So again, that's you got something under contract, you close on it, and you list it. You list it for full market value. And that's pretty much it. We lend you the money so you get listed. And that's to, you know, again, the reason why it's 4 to 6 months is because everything's predicated on days on market, right? If you're listing this property, you know, right as a realtor say, you know, the right price, you should be able to get off of it in a short period of time.
Yeah. And I want to add to that too. So I know from the inside, the lender list is what you guys are calling it. But as a consumer of the product, it's also functioning as a bridge to permanent financing because we using it to build a rental portfolio. So if there are any lenders that if you got own the property for a certain amount of time, season, and then they'll refinance it, that's a strategy that we using. So in addition to getting full value out of it, if you got the property priced right, you also could bridge the gap using your product and build a rental portfolio for a long-term investment. So I wanted to give you all that positive feedback.
And it also works if you did start construction, right? You started construction and your current lender ran out of money and you can't fix it. We'll definitely entertain that particular loan as well.
Yeah. All right. So we'll take questions. I know Corey, you have one?